Hey, good morning, everybody. I've been putting some Twitter threads where I'm talking about some of this IBIT, like trading around these some of these IBIT options. I've owned these IBIT May 60s, and it started with uh, vol being cheap and wanting to be long Bitcoin Delta uh, through IBIT. So back in late April, I bought these May 60 calls. So I kind of talk about them every now and then on Twitter. But I figured this morning I'll show you what this kind of some workflows through the Moontower AI app, which is uh, how I'm looking at the options market. So I have my tab shared here. Just give me 1 sec. So make sure I drop this link in uh, both or just in the Discord. Yeah, I don't know what's happening right now. Hold on. It's Twitter, weird Twitter behavior. Jesus, I can't even look at my profile on Twitter for some reason. Anyway, there we go. All right. Okay, thanks for bearing with that. So this is sharing my screen here. This is the Moontower. Right when you log in, this is what it looks like. So I'm not going to do like this whole tour of it right now, but we released a new feature this week called the Volatility Visualizer. It's this thing right here on the side. So, but what I'm going to do is actually show you a couple things I do. When I wake up in the morning, I pretty much go over to this thing called Cockpit. So just as an FYI, like, uh, you can, a lot of this stuff here, the main vol tools are down here, the top of funnel and drill down. That stuff is for people that are paying subscribers, but we kind of have a starter plan and a more of a pro plan. The pro plan gives you all this stuff, and the starter plan gives you most of these things up here. The details are on the website, but anyway, the cockpit is one of the things, if you're on a starter plan, you do get. So I go to the cockpit here. So I have, first of all, it takes a little while to load this one. We're trying to speed. There's two tools that take a little bit to load that we're working on speeding up. So there's a cockpit right here. I usually go down here. I sort this by Z-score. So first of all, what are all these symbols here? These are my watch list. So if I go up here, you can see it says filter tickers default. And then you can have, so this is a couple shortcuts. This is a single stocks list. I don't know if you can see the hover overs actually on these things. Oh yeah, you can. Single stocks, ETFs, you can select all. You can kind of see we break things out by sector. So this is all ETFs and single stocks. That's US listed stuff. Well, there's ADRs also, but it's equities and ETFs. So you can open this up and you can see that I've got 3 watch lists: liquid ETFs, things related to the dollar, and then a default list. My default list is, so if you check anything, like, I mean, like if I wanted to, I could go here, hit home builder. Well, that's just showing me my home builder list. When I take that off, let's say I wanted to add DHI to the home builders. I click that guy and I hit save, and it's going to say, all right, updated successfully. So now my default list, which is all these names, will now have DHI included in it. So if I go here, anyway, hit Z-score, I just see this to see what's going on in the market when I log in the morning. And what I'm looking at here, what is Z-score? If you hover over that, it tells you the definition of how that's computed. But basically, we're taking the daily change, today's change, and we're dividing it by the 10-day implied vol. Basically, like the 10-day implied vol divided by the square root of 250, or times we're taking today's change times the square root of 251 to annualize it, and then dividing it by the 10-day implied vol, because vols are all annualized. So what that's doing is I call it Z-score. It's effectively saying like how big is today's move relative to what's implied by a 2-week option. So this is just a good way of, because a 5% move in Tesla and a 5% move in SPY mean totally different things, right? So we just want to normalize these things by their implied vols. Anyway, so so when I log in, I just sort it by Z-score rather than like percent change or whatever. So there's a lot of information here, but this is I just want to skip, like I'm not like doing a full tour here. I'll skip over to IBIT. So or actually, you can see all these things, but now remember my default watch list here is loaded. That's why this is the filtered list. I'm going to go down here to this thing called vol scanner. And what vol scanner does is it shows you what's happening in the strike vols. And so my list is here on the left, and then I have these maturities. And what it's doing is this is fixed strike vol changes. So what it's saying is what's the closest maturity to 7 days, 14 days, 30 days, and so on. And then what it's showing you the change in the strike vol in the 50 delta option. Why 50 delta? Because that's what's up here. This says current delta 50. So I want to know what's going on in the 50 delta option and all these maturities. And what it's doing is it's actually saying what was yesterday's 50 delta option and what's happening to that strike vol, right? So, and we're doing it that way because we don't want to get into like floating vol effects, and we really care about like what's actually happening on the strikes. Like we don't want to be capturing the movement along the curve. We want sort of like curve change. So that'll make sense in a second. So, and this is the normalized. This is kind of normalizing my root time. I'm just gonna turn it off. So like, just to make things easier, and then ratio. This is, all that means is looking at the percent change in vol. So if vol goes from 20 to 21, that's a 5% change in the vol. But if you want to just look at it in clicks, so a vol change from 20 to 21 would be 1 vol click. If you just want to look at it in clicks instead of in percent, you just go over there and hit click. So I just like to look at it oftentimes in percent and ratio terms, because if you're comparing a whole bunch of names with vols of different assets with different vol levels, again, same thing. It's like, well, if a 30 vol name moves 3 clicks and a 90 vol name moves 3 clicks, that means something totally different. So the ratio is just kind of good for looking at things cross-sectionally, as we're doing here. Cross-sectionally meaning we're looking at a range of assets, right? So anyway, now we're sorted in click 7-day maturity, and I'm going to go down here to IBIT because that's the thing we care about. If you hover over it, you can see expiration is the May 16th. So the May 16th expiry, which is the main May expiry, third Friday expiry for IBIT. And it's telling you that the 50 delta strike is the 58.5 strike. That's the strike it's looking at, and it's saying that vol is down 1.3 clicks. So yesterday that implied vol closed at 42. Today that strike vol is 40.7. So that's how you're getting a change of 1.3. Now here's the feature we added. Remember, I said we added this thing called Volatility Visualizer, this thing. So you can go ahead and use this thing as you want, but you can actually just like access it right from here. So if I click on this IBIT on this cell, it's going to take me to the strike visualizer. And then here, remember, we were looking, that cell was telling me what's going on in the 50 delta option and the 58.5 strike. But here we get the whole surface. So we can actually see exactly like a very granular view of what's happening on the surface. So prior trade date, it defaults to yesterday. yesterday's trade days, which is May 8th. Option expiry, like we thought, May 16th. Ticker is IBIT. We have it here in strike mode. I'll show you the other mode in a second. But you can see the vol changes here, and you can see how the vol is in fact in. Now, this is a ridiculous strike range. I mean, we're looking at a 1 week option, and we're looking, and like who cares what's going on? Like the 40 strike and 45 strike, all this like far out of the money stuff. So let's shrink this. Okay, we'll take this down. We'll take that one down to 70, and then we'll kind of shift that up. Actually, you know what? Let's do all that. All right, that's a little better. Okay, this is more reasonable. And you can see that the black line is yesterday. The green line is today. So you can see that as we've rallied from 57.62 to 58.49 when the snapshot's taken, you can see that these strike vols in this region here have all come in. All these like lines pointing down, these strike vols have all come in. And then these strike vols here, they're up. But granted, these are really teeny options, right? Like you're talking about the 50 put down here. Right, so this is like $8 out of the money with a week to go, right? So you're talking about like these are probably like 2-3 cent option kind of things. So the vols don't, their Vega is tiny on these things. The vols don't mean much, but anyway. So anyway, this gives you a pretty granular view of what's happening on the surface that day, and you can see that all this stuff down here is getting hammered, and this stuff over here is all kind of unchanged. And then these guys are sort of up a little bit. So anyway, I'm long the 60s, and I wanted to, so as we've rallied, now if I was on a delta neutral basis, I'd be getting destroyed because the vol on these things has gotten crushed since I bought them. I think I bought these calls. I think vol was around like 46, 47 when I bought the, so probably around 46 or 47. I had already gotten hammered when I bought the calls. But the vols are now like 40, 41. So the vols have gotten hammered since I bought them, but I bought them naked. And the stock was, I want to say the stock was like 15 to 53, 50, somewhere between 53 and 54, I think, when I bought the calls. And the stock is now 58.49. So the calls are up from when I bought them, but the vol's gotten hammered, and obviously they've eroded, but they've sort of won on delta. And so I'm looking here, and like right now my delta is actually longer than I want it to be. So the vols are getting hammered. I still think the vols are pretty low. And then so I went and bought the 58 puts. So now I'm long just a bunch of time premium, and but my delta is actually I kind of bought too many puts. So now I'm actually like much closer to flat delta than I want it to be. I was pretty happy being long, but so I guess what I'll do is I could just blow out some of the puts, but I'm just gonna I'll just keep them, and then I'll kind of hedge around it, right? It's like I'm long options, so I'm kind of in control. Like well, it doesn't matter. You can always trade to get the delta that you want. So yeah, my thinking is if IBIT drops, basically IBIT needs to move a bunch, right? Because now I'm paying a bunch of erosion, right? I'm long the 58s, I'm long the 60s, so I need IBIT to move probably like about 7% in the next week. Likewise, I could also, if IBIT moves like 3-4% in a day, if it moves 3% in a day, right? That's equivalent to a 48 vol move, 3% times 16. So, those moves of 3% are definitely covering your theta. So you could go ahead and you could delta hedge if you wanted to. So, it's not that, I don't know, it's not that important for me to hedge it. It's not such a big risk. So I may just see where the die is cast by expiration. I don't know. Anyway, so that's kind of this. This is the new tool that we just launched. You kind of see how it works. You can go over here too. You can switch out of strike mode, put call delta. It's this is delta mode. So if you wanted to see it by delta, and we do it by call delta, right? So this is like 90 delta call, but really, this is a 10 delta put. This is really the way you should think about it. So you're like the 90 delta call up to the 10 delta call. And again, this is a ridiculous strike range, right? So we're going to narrow that one. Okay. Nope, I narrowed it too far. There we go. So you can kind of see the changes by delta. And the other thing you can do is you can I actually like the strike view more. This one is actually a bit too compressed at the moment. What I want to show you is, we'll go back to the strike view, because I'll show you something that's kind of neat. If you look here, we can really zoom in even tighter, right? Like I can go like this on the chart. Oh, sorry. I can go like that. Yeah, and it'll zoom in even more. But yeah, I don't know. I'm not an ant. I can't like look at a vol surface like that. So I'm gonna go hit reset zoom there and go back to this. So anyway, this is a better picture. So yeah, that's this volatility visualizer is basically a really good way to zoom in on the vol scanner. One thing we do here is you can go to an individual name. I can go to IBIT here, and we got this thing. So we have a vol scanner per name as well, which is pretty cool because this basically gives you the surface view. So it's like what's going on the surface. So where you have the expiries up on top, and you have your delta buckets on the left here. So if you hover over one, you can say, okay, what's going on? I know that those May 16th vols are down. They're getting hammered today. Remember, this is in percent terms. Put it in clicks. Okay. Put it in click terms and be like, look, these May 16s, they're down now 1.6 vols. And then you look at something like September, the September 50 delta option, which is the 62 strike, its vol is down just 0.2, right? Down from 52.3 to 52.1 on that strike. So one neat thing is if you normalize this stuff, we can normalize it by a date. This will do the root time vol scaling. Then you can see, okay, if we normalized all the vols for root time, then you can see what's really standing out as far as like what's actually moving relative to one another. Because if you think about it, right, like one vol point move in a 1 week option, and if you had a one vol point move in a 1 week option and you had a one vol point move in a 6 month option, that 6 month option's vol move is way more significant, right? Because its vega is so much larger. So, a 1 month. So if you look at a 1 month option, so today is May 9th. So we'll go up to like 6.6 or 6.13. These vol changes are tiny, right? Like small vol change of like 0.2. If you wanted to compare the change in a 1 month option versus the change in a 4 month option, say something that's 4 times as long, you would actually divide by the square root of 4. That would be 2, right? So a 4 month options move needs to be scaled up by a factor of 2 to compare it to a 1 month option. I write about all this stuff, so it's like not really, if you're really interested, I could kind of point you to that. But the point is that that's what normalization does. So if I normalize to say like a 3 month option, so we go like August 15th, and then now all these changes are now normalized for root time. And so what you see is that actually the time spreads have actually gotten a little cheaper today, because these options down here, they're down like say like the 1 month option, that's like barely moved. It's down like 0.1 in these terms. But your November options are down, this at the money here, somewhere between 0.4 and 0.7, depending on which strikes you're kind of looking at. So this is the time spread has actually gotten cheaper today. Net of theta, obviously this option is decayed more than this option, but that's just the theta effect. But vol wise, the time spread's actually narrowed. This is what this tells you when you normalize the vol. Anyway, so that's the vol scanner per name. So it's a really nice matrix. You get to see the expiries on top, the deltas on the left here. But anyway, let me show you why I think just kind of why I think the IBIT vol is cheap. Again, this is my watch list. So you can see this is what vol percentile names are in. You see IBIT, Bitcoin, coin, like basically everything related to crypto here, right? Is in a very, very low vol percentile. The vols are gotten hammered. But what you see is that the y-axis is the 6-month vol divided by the 1-month vol. So you can see that the vol term structure is very ascending in Bitcoin, meaning like the further 6-month options are they're like a 20% higher vol than a 1-month option in IBIT. So IBIT it's not unusual for term structures to be ascending when vol is really low, right? Like you know that from looking at when S&P vol would be like 10. And, obviously if S&P vol is 10, you don't think the 1-year vol is also going to be 10. It's going to, it might be something like 14 or 15 even. So it's normal for there to be a lot of steepness or upward ascension in the vol when the vols are very low. And that's what you're getting right here. But you're getting, this is pretty steep. Like just from looking at this all the time, you kind of see that when vols are in a typical steepness, when vols are sort of in their normal range, a typical steepness might be somewhere around 10, maybe 10, 15%. This is a little bit extra steep. These are standard deviation lines, but so it's saying this is like way steep compared to what we're seeing here, but there's not a lot of sample of stuff that's like really low vol. So standard deviation lines, not it's a little misleading, I think. Also, these standard deviation lines are based only upon what's on my watch list, just only these names, right? So if I were to look at the entire universe, that would be a better example of what the typical steepness in the market is. But you can actually see steepness is, if you looked at this a month ago, the steepness would have been way more descending descending in the market. All your front month vols were jacked up, and all your 6-month vols were trading at a pretty big discount to your front month vols. And now as things start to move back, everything's coming out of that like 95th percentile where it was 100th percentile, and is drifting back down to like normalcy a little bit as the market's been rallying. And you're getting the steepness is going back to sort of normal levels. And now you've got a pretty flat term structure range, which is, I haven't looked at the VIX term structure in like 2 days. The VIX term structure itself was really flat. Anyway, so yeah, what am I seeing here? So I see IBIT vols are real cheap, or sorry, I shouldn't say they're cheap. What they are is they're low. they're low compared to their own history, and there's a lot of steepness, which means that the 6-month vols are at a healthy premium to the 1-month vols. So that's why I'm long these. I want to be it's part of the reason why I want the 1 month and not the 6-month, for example, while the vols are low. But then we can go to the real tab. This is like, because all of that picture right there is just looking at the vol term structure. It's not telling us anything about how the vols are carrying. It's not looking at the VRP. It's not looking at like what's the ratio of the implied vol to the realized vol. So there I'm like, okay, I like owning Bitcoin vol, but is it actually carrying? And if you look over here, this is a chart of what's carrying. Now, remember, like VRPs is implied vol, which is forward looking, divided by a realized vol, which is backwards looking. You're getting a lot of names right now that have these big negative VRPs, but this is also pretty misleading. So this is the reason is that we've had a lot of realized vol in the past 30 days. And obviously the market looking forward doesn't think that that's going to repeat itself, which I think is the market's been rallying. So it's rallying because it doesn't expect a lot of vol in the future. Otherwise it probably wouldn't be rallying, right? It's like it's almost like what happens in the vol and what happens in stocks themselves is correlated. Or there's a overlapping sentiment or factors that are under both of those ideas, right? But anyway, the for the most part, market doesn't think that the last month's insane volatility is supposed to happen in the next month, right? So you're getting all these names where the realized vol the last month is creating a really big denominator, and your implied vols are much lower. So you're getting these negative VRP readings. But one way you could adjust for this, because this is misleading, would be to say compare your implied vol. This is the 30-day realized. If you compared your implied vol to a 1 week realized, because the 1 week realized vols are much lower than the 1 month realized vols. I could just demonstrate that pretty easily by we just click on SPY. We go over here, and you could see kind of the flattish term structure. I mean, once you're past like 14, this is 7 days, this is 14 days, but like this is 1 month, your term structure is like these vols are pretty flat going across here. This is a constant maturity, so there's some interpolation stuff going on here. But look, this is the chart I wanted to show you. This is a vol cone, which shows you the various percentiles what the realized vol has been historically. And if you look at this green line, this is the current readings of realized vol. So your 30-day realized, like I was saying before, why it's creating all those negative VRPs, or that because the 30-day realized is 37% in SPY, right? And obviously our implied vols are more like 20. So if you were looking at the 30-day realized and comparing it to the current implied vol, you'd say, wow, those implied vols look really, really cheap. And that's kind of what this thing's saying here. This is looking at your VRP and it's saying, hey, your 30-day realized is 37. Your at the money vol is just around 19. This is a really negative VRP. But if you go over here and look at how I've been realizing this, again, that green line, I'll focus on that green line. Yeah, your green line for the past 1 week realized is only 15.77. So if you used a 1 week realized, you would actually have a positive VRP, right? Because you're getting your 19 implied vol and your 1 week realized is only 15. Right. So this green line is kind of showing you just how much the realized vol has dropped based on your sampling window of going from 30 days to say 14 days and 7 days. So actually this is something we're working on right now. We're going to put, we're working on a little bit of a realized vol library where we're actually going to use intraday price changes to compute some of our realized vols. So it'll be a way faster updating realized vol measure. And then the user will be able to, the idea is that the user would be able to toggle between different realized vols that they want to use depending on what they're looking at. Like if you're trying to assess, an option that's a year out, like 1 week realized vol doesn't really mean much to you. But if you're trading like a 2 week option, a 2-3 week option, then you probably want to look at this chart, but you may just want to have the VRP using a realized vol that's computed on a more recent look back period, or something that's you can kind of use Garch models that will like exponentially weight the nearer the nearer dated realized vol versus the further back price samples. So or change, how much it's changing today to weight that more than how much it was changing, say, like a month ago. So that's something we're in process on right now. But in the absence of that, this is the chart you would look at to be like, well, those VRPs are really negative, but actually, how are we realizing right now? And we can see what's kind of nuts is your median over the last couple of years, going back to the beginning of 22, or end of 12/31/21. If you look at the realized vol, a 7-day realized vol, the median 7-day realized vol is about 14.37. You can see the hover over there, 14.37, which is about what we're realizing right now. We're realizing median levels of vol over the last few years. So there actually is a little bit of a VRP in those near dated options. But anyway, going back to this real tab, how are things? So again, these are kind of distorted because you'd really need to go back and look at that vol cone to be like, well, what's a more relevant realized vol to look at than the last 30 days? But here you can see IBIT, those vols. Okay, the implied vols are cheap, or they're low. Again, they're under the 5th percentile, and they're not carrying very expensive, right? Like this VRP is 5. I mean, what's happening here is I actually go down here. IBIT, right? Your 1 month implied vol is 44, right? And the vols I'm actually long, like those 1 week options, those are 40 and a half, 41 vol. And what are you realizing over the last month? You're realizing 42. So it's in line with what you're realizing over the last month, but I don't think IBIT has had the same signature as those other names where the implied, you can see it here, right? Like the 7-day realize, we don't have that same issue. By the way, this we have less data for IBIT because it's a newer product. Like, you could go, we have Bitcoin in here, so you can look at Bitcoin and have the full series, but for IBIT, it's like cut off because we don't have as much history. Anyway, over here, we don't have the same signature, right? Like the 30-day realized vol in IBIT has been 41.84, and the 7-day realized vol in IBIT has been 39.83. And that's because IBIT didn't get as crazy. It wasn't as crazy volatile. Its volatility, the way it's been moving, has been a lot more consistent over time. It hasn't been acting like these risk-on assets where the stocks have went up a bunch and then the vol gets just totally trashed. And IBIT's been on a heater, right? It's like, I don't know how much Bitcoin's up in the last, we're over 100,000, and it's had a really nice rally in the last like week or two. So anyway, the realized vol in IBIT is not, you're not paying a massive premium in any way for it in those options that are already low. So you're buying options that are carrying well, and they're carrying, you're not losing to the carry really. Like I said, if you do an attribution, I don't have it on here because I have it in my staging environment, but if you look at the attribution of if you had a delta hedged IBIT long May vol position, you've lost a little bit to the realized vol being lower than the implied, but really all the losses on the delta hedge position have been coming because the vol has gotten slammed. That's where most of the pain is. Anyway, I just did this because I've been talking about IBIT on Twitter and all that, and then we launched this volatility visualizer, which is super cool. So anyway, we are, by the way, this one thing you can kind of do here. Let's go back here. I don't remember the exact date I bought those calls. They were like April. It might have been like April 23rd or something like that. But if I go back here, let's see. If I compare the surface from April 23rd, and you can see what happened here, right? It's like, actually, again, let's shrink this. What happened in these May 60s? Right? Your May 60 call, its vol is down 15. 15. Now this says 15 points. Is that in percent? That's well, I probably bought them after April 23rd then, because I remember paying, it was under 50 vol that I paid for them. So this must have been when the implied vols were all still super jacked. We have this table down here. Actually don't have this in the front end. This is like an admin. This is like my admin view, so I can see the data table. But there are 41.3. Okay, I see. It's a percent change in the vol, I guess. So the implied vol was 49. Yeah, that's what it is. It's the percent change in the vol. So the vols went from 49 to 41.3, and that's saying that's a drop of 15.71%. So this might have been closer to the time that I bought them. Like I said, I bought them under 50. I thought it was closer to like 46. This says 49. Maybe that's the wrong date. But anyway, you could compare when you traded something and what's happened in the surface since then. And yeah, this makes sense. Like the stock, like I said, I think the stock was between 53 and 54. So here the stock has went from 53.20 on April 23rd to 58.46 on today, and the vol has gotten hammered. And I say it all the time, but vol gets creamed and where you often gets creamed and where you're going. So the if you're buying calls for delta, in this case, I bought the calls because I thought in the scenario where Bitcoin, I thought it was going to be like not Bitcoin rallying on a general risk on environment, right? Like Bitcoin's rallied along with everything else. My premise was that as Bitcoin was kind of selling off, that if things were to get really hairy, and the flight to dollar stuff accelerates, that some Bitcoin could, take off its risk on characteristics and take on sort of like a flight to getting away from USD. I don't know. This is what happens when you play macro when you're an options idiot. But so the idea was if we rallied by May, in May, to 60, that it would not have been like the kind of rally that we actually experienced, which caused vol to get hammered, but it would have been a way faster, sloppy rally that would have been coming from more of a place of fear than risk on. So I was wrong about how this thing would rally, and apparently I deserve my fate with the implied vol and these things getting crushed. But that was the reason I normally wouldn't buy a strike where I thought the thing we're going, for example. As a matter of fact, I didn't think Bitcoin was going to go there. I was just like, if it goes there, the fashion in which it would go there would make these May 60s work really well. In a sense, I've gotten like kind of lucky that it went up on along with the risk on, because it really wasn't part of my premise. But the market's still punishing me by making the vol come in on those. So anyway, I'm rambling at this point, so I'm going to let you go. Thanks for checking this out.